Well, I am so excited to introduce Damon DeSue. He's the Global Tax Controller for PRA Group, Inc., located in Norfolk, Virginia. In this role, he is responsible for the global tax provision, compliance, and tax internal control processes. Prior to joining PRA Group, Damon was a tax director for two other public companies located in the Hampton Roads area, Ferguson Enterprises and Dollar Tree stores, wherein he was directly involved in managing tax functions, including direct and indirect taxes. He previously worked on state and local tax practices for CBH and KPMG, serving clients all across tax disciplines, including state income and sales and use taxes. Damon holds master's degrees in taxation from the University of Georgia and a bachelor's in accounting from East Carolina University. Damon currently chairs the Virginia Society of Certified Public Accountants Diversity, Equity, and Inclusion K-12 Task Force and was formerly the chair of the organization's board of directors. He also previously served on the American Institute of Certified Public Accountants Council and the Leukemia and Lymphoma Society Man and Women of the Year Hampton Roads Selection Committee. So Damon, we are so thankful for you today, and especially for PRA Group's support and sponsorship of this event for continued years. The teachers are very thankful for the support that PRA Group provides us, and we're so grateful to have you here today. So with that, I will turn it over to you.
Thank you, Amy, for the introduction. Listening to all that, I just realized maybe I've done a lot over the years, and I'm to the core. I'm a tax professional and definitely a volunteer who likes to get out into the community and help to educate about the accounting profession. And hopefully this presentation will give some insight to the participants here about sort of my philosophy, how I try to educate, and what I think I can do to try to help you educate your students as well. So I have prepared a slide presentation. And what I plan to do today is just walk through the slides, as well as offer some anecdotal information about the information on each one of the slides. I will say this though, to the extent that people have questions or comments or need a little bit more detail, don't hesitate to try to reach out. I know we have some people that are participating online as well as in the room. So if we can try to coordinate that. And if I miss it, hopefully we'll have some time at the end. And I will try to circle back around for the Q&A.
I'll be sure to try to moderate the chat for you there as necessary.
Okay, appreciate it. Amy, just kind of jump in, cut me off and ask the question, and then we'll go from there.
Absolutely, sounds good.
So why don't I start with sort of just an overview of PRA. For those of you who know or may not know, PRA is a global debt management and collecting company. We have operations throughout the Americas, in Europe, which are our primary hubs. And what we do, and our role, I guess, in the finance industry is not only do we collect debt, but we try to be a teacher of financial literacy to a lot of our customers to help them with their management of their debt obligations. And for many of our customers, we will buy debt from banks and then we will work with individuals to help set up payment plans so they can collect the debt. So we're very much in tune with individuals' needs as an organization, and look to helping a lot of our clients manage their debt load accordingly. I do have to add a disclaimer. End of the day, what we're going to go over today is about tax advice, right? But what we always advise individuals to do, because tax is very unique. It is sort of uniform to each individual, family, et cetera. And you may need to consult with your own tax advisor to really deal with your situation. But what we're going to deal with is I'm going to try to provide some very broad strokes on particular tax topics, things that I think, obviously I have a more complex understanding of taxes as I've evolved in my career. I've been doing this for quite some time. But if we're talking about students, what we want to do as it relates to setting a foundation for them is to make sure they just have some base knowledge around what to expect as they transition, let's say from high school to college, actually into becoming an individual within the workforce. And that's sort of how we've kind of set up this presentation today to talk through sort of these things. I will lay out, there's a couple quotes here. I want to sort of make sure, and this is more of a history lesson part of it, but taxes are the price we pay for civilized society, right? We all live in cities. We all have, there's federal, state, locality influences on our lives. The taxes we pay actually, help drive some of the benefits that we do afford as it relates to operating our communities. And that's why everybody pays taxes. I guess it's just one of those things, part of life. And taxes are just simply contributions demanded by citizens as their fair share of the expense of their government. So these individuals kind of are sort of the forefathers of some of the principles in taxes. I would encourage you, if you want to learn more about them, Justice Oliver Wendell Holmes was actually in the Supreme Court dating way back. He was there for 30 years, but it goes back to the early 1900s. And then Paul Belliot is, he's actually a French economist, and I think he's more focused on sort of the underground principles that we kind of live with today in our tax policy. So let's talk about, really kind of the core of what's happening here, the types of taxes, right? So we have individual and corporate taxes, which are based on like sort of income taxes. Generally, you're going to have that at both the federal, state, and local levels. Maybe they get down to the local level, depending on what state you reside in, as well as some states do not charge an income tax. So it is dependent upon where you live. But generally, it's a federal, state, local obligation. Sales and use taxes, those are, I would think of the sales piece of this would be like consumption taxes. We all go to the Walmart, we pay, you get a little bit of tax that's on your bill. That's your sales tax that you're paying for the transfer of that good from the retailer to you as an individual consumer. Gross receipts taxes are really more of those taxes that if you own a business and you generate revenue, some localities, especially like here in Virginia, and once again, this is sort of a state-driven type of tax because it doesn't apply everywhere, but some localities will require you to pay tax based on the amount of revenue that you receive. So you've got sales and gross receipts taxes out of there. Property taxes, we should all kind of, for most of us, be familiar with. If you own a house, you own a car, depending on where you're located, you may have to actually contribute to that individual locality. And property taxes are usually regionalized to the locality themselves as it relates to how they set up the rates and the structure for the tax obligations. The state and gift taxes, those are really applicable for those who are fortunate to, in their lifetime, gain and acquire wealth. Typically, what happens when you leave this earth, you have to unfortunately pay taxes, or your heirs will. So estate taxes and gift taxes are part of that formula. So, it's one of those things that from the day you start earning money to the day you die, there's always a tax, right? Excise taxes, these are things that you may not individually kind of understand, but like, for example, gas, certain states, there are excise taxes that are added onto the cost of fuel. For example, you fill up your car and it costs, like today, maybe it costs $4. Well, that $4 has various components. It has the actual cost of the gas and the retail value of that gas that's being passed on to you. But there are taxes that particular retailer, that gas station, has to pass on to the government. These gas taxes often are used to rebuild roads and maintain our transportation system. So it's more like a use of our transportation system that these taxes would apply. User fees, sin taxes, alcohol, luxury taxes if you buy a boat, all of these kind of relate to what excise tax would be. Payroll taxes are the other area, and that's mostly for Social Security and Medicare taxes, because once we all at some point reach retirement age, we're paying today in our working years Social Security and Medicare taxes to have benefits when we retire, and those benefits stem from, obviously, you want a Social Security check, or you may actually need health insurance. So we today you'll see payroll taxes that are basically deducted from our checks every paycheck. And then there's tariffs. And I don't know if you've heard of the news, but obviously, when we as a country import goods from a retailer who's a US based, imports goods from let's call it China, typically there is a tax that may be imposed upon that transfer of good from one country to the other. So that's called a tariff. So just in a broad stroke, these are kind of the types of taxes. For many of us though, I think we, especially in the accounting and tax field, we built a profession around trying to help minimize the amount of taxes that any one of our clients actually pays. The avoidance of taxes, the only intellectual pursuit that carries any reward, which is a common quote. And it's really about making sure, I think everyone's maybe on board on paying their fair share. People just don't want to pay more than their fair share, and they want to pay the correct amount. So, that's something that's embedded in all of these. Everyone wants to kind of have a baseline about how each one of these tax types influences them and how they will be able to make sure they're just paying the right amount of taxes overall. So how I'm going to sort of walk you through sort of the process here and how to try to connect what are some of the key areas that, at least at the demographic that you're focused on trying to educate. There's really kind of 8 tips that I think are kind of important for, someone. I've got children who are now, I've got a high schooler. I've got one who's now recently graduating from graduate school. And then I have another one that graduated some years ago. But for each one of them, what I tried to kind of give them was some baseline education about sort of the expectations that as their life changes, buying houses, getting married, having children, all of these life events in some form or fashion have a tax consequence, right? Getting that first job. So what I'm going to try to do is take these tips and apply those to life events. And hopefully these life events are kind of the foundation that you can use to help expose students to the things that they would have to take into consideration as they start to become more integrated into the workforce. First, boosting your tax take-home pay. I'll walk through some examples. Choosing the right tax filing status. Kind of establishing the principle that there's no escaping Uncle Sam on your earned income. What choices you may have to make about the types of deductions you can have on your returns. The fact of just understanding the base about how income is actually taxed. And then also some incentives when you have, you grow your families, you have children. There are some incentives that are out there that are built into our tax code that allow you to save or at least offset the cost of raising a child or having to have dependent care for them. There's also incentives that are out there that are related to if some of these students go on to the next higher educational level, there's incentives and offsets to the cost of paying for school. And then overall, the last tip here would be about just making sure that people understand there are really good resources that are out there that either the AICPA, which is the American Institute of Certified Public Accountants, for which I'm a member. There's, for example, in West Virginia, there is the State Society, which is a state sponsored organization that really helps to promote some of the initiatives by the American Institute of Public Accountants. But they have resources as well that students can go and teachers can go to as well to find certain ways to help teach certain areas, as well as just the IRS. They have a pretty good website that has very informative information. And I would encourage the sooner you can get students to go to some of these sites to get familiar with them, just as something of a teaching mechanism within your courses, the more they'll be able to, one, have awareness about it, and then two, be able to go there to maybe find some of their individual questions, and then consult with the tax advisor as necessary. So let me walk through. So how am I going to tee this up, right? So, I want you to meet Joe Mountaineer and Suzy May Butterfly, right? What I've created is these characters to help sort of explain the different life events for which they may be exposed to. Now, let me give you a little background about Joe Mountaineer, right? He's a diehard West Virginia football faithful. I know people have a lot of passion about football in West Virginia. My son actually was recruited, and I went to several of the games there. And I would tell you it was one of the best experiences I've had as it relates to attending a football game. Great state for football. But Joe Mountaineer is one of those people. He's a diehard, right? And then one day he wants to graduate from West Virginia University, and he wants to work in an accounting firm, and he wants to, one day become a CPA. As a high schooler, he just has a part-time job. He works at a local grocer, not significant, but he will experience some life changes. But he has a goal of wanting to major in accounting. Joe also wants to marry his girlfriend, Suzy May, right? Butterfly. Now, correct me if I'm wrong. I looked up butterfly. Butterfly, I think, is like it's one of the. I think it's a symbol of West Virginia. But did a little research, but that's why she ended up with that particular name. And they want to have 2 children. They want to buy a house in Morgantown, West Virginia. And they realize, and they've been exposed, and they realize because of all these life events, that at some point there's going to be a lot of questions about taxes, and they want to know how each one of these decisions will be impacting them. So what I've done here is I've highlighted the key buzzwords about the life events, the things that are happening or may happen to them in the future. And I'm going to use these to illustrate as it relates to the tax code and where the tax implications can be of what they should be considering. We'll get on time. So let's talk about, just establish a baseline too. Like I said, Joe's he works at a grocery store. He earns about $15,000 in 2021, and he files single. And we'll get into why there's a difference between when you increase your income, your filing status, how that impacts your taxes, and et cetera. So, but here's sort of the baseline of what his liability would be just under those facts and circumstances, right? And I've just only computed the tax. This may not actually be what he'll pay, but what I wanted to illustrate here is the actual tax amount, because beyond this, there may be credits or other incentives that would allow his tax bill when he actually writes to a jurisdiction to be 0. But for illustration purposes, I've just stopped at the tax amount. But if he had $15,000 and he worked for somebody, he's got W-2 income, right? Standard deduction, when you file a return, you'll have an option to standardize or itemize. But in this example, he doesn't have a lot of itemized deductions, which I'll get into later. He just has a standard deduction. So his taxable income of that 15 was roughly $2,450. He's in a 10% tax bracket. So his tax per calculation would be like $245. So this is just the baseline, and we'll get to why this differs from when we're going to end up later in the presentation. Any questions on the baseline? Any comments? I will continue to move forward. So that's sort of the backdrop of how we're looking at it. So here's one of the things that I think is kind of a basic, important aspect that anyone should understand when they're starting their new job. So here's Joe. He's been fortunate. He gets his first job. He's going to make about $50,000 a year, right? The question is, this tip here is about boost your take-home pay. What I'm trying to emphasize here is that for many people, if you think about it, when people file their tax returns, a lot of people get refunds, right? In some cases, they get significant refunds. Well, that's just basically an interest-free loan to the government that comes around once a year. And what this has an emphasis on is you're able to get some of that money back in your paycheck week to week. Hopefully, if you plan accordingly, you would end up basically when you file your tax returns the following year, you would owe no taxes. You wouldn't get a refund, but you wouldn't pay either. And what's happened is if you focus on things, when you first get employed, one of the things to think about is the onboarding process. Generally, everybody has to fill out for the federal taxes, W-4 form, right? Or in West Virginia, you have an equivalent form that measures your withholdings to help you understand how and what amount of money taxes will be withdrawn from your salary or payroll every paycheck. So looking at your W-4 is kind of critical. So for example, exemptions by definitions, the number of exemptions you select is kind of important because an exemption kind of represents what sort of is built in as a deduction that will set the amount of withholdings that your employer will take out. So an example would be if you're married, You have you and your spouse. If you have children, you count those as exemptions. So, you know, let's say there's a married couple with 2 kids. Well, there'd be 4 exemptions there, right? Now, by setting your exemptions, what that does is it sets the table by which is a prescribed methodology that your employer provides for withdrawing checks and remitting to the government on your behalf the amount of taxes that you've already paid year to date. Well, what we can kind of help our students understand is that you don't have to deal with just the exemptions that are for the physical presence of spouse, children, et cetera. You can also have exemptions that are higher based on if you have anticipated deductions. Those deductions actually filter in to determine how it gets applied on the withholding schedule that your employer is using. So just to give you an example, me personally, I generally have on my W-4 somewhere in the neighborhood between 10 to 13 exemptions. So when I file my taxes, now I end up paying a little bit, but actually my payment, when I make that payment, I actually don't usually pay penalties or interest. So I actually get the advantage of having an interest-free loan. And what that's meant though is in my weekly check, my bi-weekly checks, I actually get more back in my checks because I don't have to pay it to the government at that time. I wait to settle that bill when the tax returns are being filed. So just the key basic understanding of withholdings and what withholding level applies actually has an impact on what you're seeing on your check every week or bi-weekly or monthly. You can get advantage of that money today instead of waiting until you file your returns. So it's just an easy trick to help increase cash flow for an individual as it relates to their day-to-day living expenses, things they're managing on a month-to-month, paying their bills. No reason to give it to the government ahead of time. You might as well just save it for yourself and be able to sort of improve your quality of life. So the key here, the higher the exemptions, the less that your employer may be required to withhold. You obviously would need to contact, I think, and be in touch with the tax advisor to make sure you pick the right number, but it's really to let you know you have the flexibility. Now, the state can be a little bit different. I do know here in Virginia that typically you are limited to the exemptions of, like, for example, before physical presence, right? And then that table applies and then it moves forward. But for your federal, you definitely have the flexibility to create more cash flow just by managing your W-4. Tip number 2, choosing the right filing status. So as I mentioned in the facts for Joe, Mountaineer, and Suzy Butterfly, you know, they had planned to get married. So they finally tie the knot. They get married. So what does that do? That actually changes their tax filing status. Before, they were 2 individuals that selected, and when they filed their returns, they were single. That was their filing status. Now that they've married, they actually have a couple options. They can combine their tax returns and file married filing jointly, or they can file married filing separately. Now, if they do separately, just to let you know, that's almost like treating them still as singles. Now, why that's important is because the single rate actually, as it relates to how it's applied to income, is actually slightly higher based on the tables, which are the required withholdings that they have to have. That's higher than if you actually filed married filing jointly. So it is important to understand by selecting the right status, which one applies to you or has a better tax treatment. And there can be reasons that you can do jointly and separately. Separate can be for a variety of different reasons, but generally most married couples do file jointly. And it does have an impact on what amount of withholdings and or ultimately the taxes you would owe. And what I wanted to illustrate here was by filing as a married couple, or separately as a married couple, i.e. married filing separately, their tax bill is actually roughly about $1,000 more than if they filed married filing jointly. So the key point here is, and where the teaching moment is to help students understand that there are some differences in the filing status, and that depending on their filing status, the actual tax that they pay, the rate that is applied to their income is actually different and may result in them actually paying more tax depending on what they choose. Tip number 3, there's no escaping Uncle Sam, right? We all know that, you know, and just one thing that's happened recently, especially since the pandemic, the gig economy has grown tremendously. And I think a lot of young people see this now. They're not just traditionally going to a job, working that job, and that's the only thing they do. They have side businesses. They have side things that they're working on. They're earning money differently. I'll use an example, people DoorDash, right? Outside of working, they earn extra income. Well, because there's such a growth, that one thing people should be aware of, that they still have a tax obligation, even though their employer is not the one that's actually withholding and remitting. They may still need to report that income. So business owners, for example, are still responsible for paying taxes. Now, they may, as a sole proprietor, which means you just own your own business, they may have to include their net earnings on the same 1040 along with their W-2 earnings from the employer when they file their returns, right? They're still obligated to pay federal and state taxes, and they're still obligated to pay Social Security and Medicare taxes, no different than if they were working. The computation of those are different, but one thing to note, though, is when you have your own business, it does open up an avenue for where they truly look at the net earnings and operations of the business. So in this example, Suzy, who's helping Joe, she's sort of getting his CPA firm off the ground, and helping him and some of his side endeavors as he's in school. Right now, they've earned like $10,000 in fees. They were doing some tax returns on the side or whatever they were doing, but they earned some money in this example. But then they also incurred some costs. They may have had office rent, supplies, telephone costs. They were running a tax firm, so they had maybe some tax software. So what's key here, though, is that, remember, Joe already earned $50,000 from his job. Here, we're actually including $6,000 because you do get, in many cases, offset deductions. So that's where your tax advisor would come into play, because they'd be able to help you maximize the amount of the offsets against the money or cash that you collected in order to determine what you really have to include. In this example, we said it's $6,000 based on the activity that's occurred. But here's the keynote here is that, when you earn money, there's sort of a tax implication that's going to be there. Unless you've got a valid deduction, there's some money that would be owed to either your federal, state, or local government. It's good to know, so you can keep yourself out of trouble if you don't contribute at that point. Tip number 4, as I talked about the standard deduction, it's important, right? So the amount of deduction. So for example, in Joe's example, he earned $50,000 and now they've got $6,000 of business income. So they would expect to have $56,000 of taxable income to report. Well, the next phase of reporting is you would be subject to able to deduct either one, the standard deduction, because in the tax calculation, which I'll go over a little bit later, the government does allow you to do and deduct an offset, which is called the standard deduction. For other individuals, you can actually do what they call as itemized deductions. Maybe you've got other deductions that are in excess of the standard deduction. So for 2022, the standard is $25,900. But if you itemize, you may have some life events that may allow you to take advantage or include as deductions the costs that you've incurred. For example, medical expenses. If you own a home, you've got your mortgage insurance. You could have state and local taxes that you could deduct, charitable contributions. There are a variety of itemized deductions. The key here, though, is to understand what's the higher threshold. You want to deduct as much as you can. For some people, especially under the new way that we do compute taxes here in the US, back in 2018, when the Tax Cut and Jobs Act was passed, there were some adjustments that Congress had passed that put in place like this floor for the standard deduction to try to simplify returns. And then they also modified some of the itemized deductions that you would be able to take. So an exercise for someone who's trying to learn this is to understand what are the differences and when can you apply certain rules here. Now, in my example, I've said that basically they only had about 15,000 deductions. So here, the standard deduction would be more than enough for them to be able to take on their return. But with the TCGA, what it did do, I just want to note that come after 2025, a lot of the provisions that were introduced into the law, such as the standard deduction, a lot of that stuff will revert back to the old system. So what you're probably going to see, and what individuals probably should know, is that you might see itemized the tax filers more than you would see standard deductions, because prior, a lot of people who owned a home, they were able to deduct, for example, like their property taxes, or they were able to deduct their state and local taxes, whereas now there's a limit on that amount. So it actually really pushes people from a simplification standpoint to be more standard because they maximize the deduction. Come 2025, some of these itemized deductions, the provisions will revert back to pre-18, and you'll start to see a lot more itemized deduction because they'll be able to deduct more that will be above the standard deduction thresholds. So there's a choice to be made in the future for an individuals who may be married, own a home, have different aspects as it relates to whether or not they will they'll be able to standard deduction or they'll itemize. But it's good to know that at some point there'll be a choice. Tip number 5. This is just an exercise to sort of give a visualization that all income isn't taxed equally. I was actually recently, I saw a TikTok and it actually went through an example and it went between 2 coworkers, and one of the coworkers said, I don't want to raise because if I get a raise, then I'm gonna have to pay at this higher bracket. Well, what was not taken into consideration, his other coworker laid out and said, well, you have to understand there's a graduated tax system that we use here in the US for both federal, state primarily. And what that means is that what you're doing is your rate changes based upon the incremental income that you receive. So in this example here, for $50,000 of taxable income, and this is just a good math exercise for someone to go through to understand how the tax system works, is that on the first $9,950, your rate is actually 10%. On the next incremental, I think it's 30,000 plus, I can't remember, but the difference between the 40,525 and the 9,950, the tax rate is actually 12%. So you would add your tax for the 10 to the 12% times that incremental amount to get to your tax amount for that amount of income. And then if you up to 50,000, like the 50,000 minus the 4525, it would get taxed at 22%. And this actually goes up. These tables, they scale up depending on the amount of income you make. But what that means is you just add the incremental tax, and that's how you get to your tax bill using a graduated system. It's not as if because you make 50,000, you pay at 22. It actually builds up. So it's a very simple, I think, exercise for students to be able to understand and be exposed to. So they realize that obviously they'll make more money, but the way our system works is that doesn't mean you're always paying at the highest rate. It actually builds. Tip number 6. These next tips are really based on changes in life events. For example, Joe and Suzy, they welcome their first child, right? And so we all as parents and those who are parents, realize that you may have to rely on dependent care or child care as a support system to you as it relates to you working. Well, what is an incentive that is allowed when you have children is there are child tax credits and dependent care credits that are available. One, for just having a child, the government's already set up sort of incentives to provide sort of an offset to your tax bill for the number of children you may have. And in some cases that may be actually refundable. I know for 2022, they've actually capped the limit of the refundable amount. And what I mean by refundable means you have a child, you may not actually have tax liability, but yet and still you're actually still receiving an incentive from the government for that. And then dependent care tax credits relate to, as I mentioned, if you are sending your child off to daycare or someone is watching your child, those expenses actually allow for you to receive a credit based on a percentage of the laying costs that you're making to spend on dependent care. So it's just one thing I like to bring up here is because obviously when your family grows and children start to involve, there's a question to ask is, there are some incentives or there's some tax breaks because obviously your costs have increased from the standpoint of raising a child, but there are some tax incentives there that are offsets to your normal tax bill that would be available to you depending on your situation, number of children you have, as well as whether you have to incur daycare costs in order to, maintain and go to your job and have your child taken care of while you're there. So, we encourage people to, one, be aware, and then two, take advantage of these credits and, work with your tax advisor to make sure you're actually getting the full offset that's available to you. Tip number 7. And I think this probably would be at the forefront of a lot of people who are thinking about maybe going to college, to know that there are there's incentives that are out there that help to offset some of those costs as well. The American Opportunity Tax Credit itself, it really only applies to undergraduate, but there's a maximum credit of $2,500 that can be refunded to a student to offset some of their bill that they've incurred for going to going to college. I'm sorry. So there's an incentive that's there that's built into the tax code that Congress has passed to help offset some of the college costs. There's also a lifetime learning tax credit. And the difference between the American and the lifetime is that the lifetime actually can expand if someone wants to go beyond their graduate or their undergraduate. They can go into graduate or a professional degree, and they'd be eligible to get a credit on their return as well. And so these sort of work hand in hand in the context of being able to further shield the costs or reduce the costs as it relates to going to college, and give some relief for the costs that are incurred by students nowadays. In addition, many students have to take loans, right? So when you take these loans, then you're allowed to take a deduction for the amount of interest that may be accruing on these particular loans over time. Obviously, we take loans out to pay our college tuition, but it doesn't stop there. You graduate, you move on into life, and you still have student loans. So there's a ability there to offset some of the incurred costs. So the government has set up these particular programs to help minimize the real impact of what happens from a cost standpoint of going to college. So we've gone through these first 7 tips and tried to equate some of the life events that were illustrated on the earlier slides to the tax implications. So where are we now when it comes to looking at what Joe's and Suzy's tax bill will be, right, in 22? So here's a couple things that have changed, right? Now they're married, so they elected to do married filing jointly because they were given advice that it was, from a tax calculation, it was more beneficial to them. They also, based on the earlier slide, have elected to, because their income and the amount of deductions, they just kind of made it simple. They're just going to standard deduction because they don't have enough itemized deduction. They've already got a bead on what they would need to report as relates to their taxable income. And this calculation here kind of walks through what's the difference in tax that they're going to experience based on, 1, getting a new job, 2, building some gig income, making a choice about whether to standardize or itemize to come up with a taxable base, and then taking what they've learned about the graduated system and applying those rates to the incremental part of their income in order to determine what their tax bill. So W-2, 50,000 came from working for the accounting firm. 1099 was from the net earnings from the business. Standard deduction, because it was actually just higher, they ended up with taxable income of 3,100. And if you were to take the rates of the graduated system, the example, you would end up with 3201 as a tax bill. So you'll note that this is a little bit, it's different, right? Back when Joe was just working as a grocer, the tax bill was like $245. Now it's gone up to $3,200. Now, one thing I want to caveat, just make sure that the next elevation or education about what happens with what will you actually remit or pay to federal, state government really has to do, there's another layer. We talked about some of the credits that may be available. Those credits would be offsets to this $100 bill. So if they have children, there's a credit that's there. If they've incurred college expenses, there's another credit. So what you would actually physically see as it relates to the tax return here, this is what's going to economically happen. On the W-2 wages, the employer for Joe throughout the year has been withholding taxes. Now, Joe was smart, though. Joe actually adjusted his W-4 because he knew he had some future deductions and or credits. So the amount of money that was being taken out in his paychecks every period was less than normal because he matched his exemptions properly. But you have the tax bill, you actually have the credits themselves that apply to the children. And as a result, those children now, there's a deferral of the cost. They're maybe using daycare. So what I would anticipate here is that the actual monies of the remittance that would be due to the government would be significantly lower because the credits themselves will offset this tax liability. So it's kind of critical to understand that, how do you build up your tax? How do you get to what you make your tax bill is, but then to take advantage of the credits and things that are available to you to offset that. So this was just sort of the rough end, as we go through these life events, all these changes, this is where they ended up from a tax bill. And once again, the actual remittance may be different. Any questions or comments or anything that's coming through? So tip number 8, what I wanted to kind of point you to were from a financial literacy standpoint, just to, we talked about some of the resources. Here are some very specific websites that actually in themselves have exercises and things that students can learn about, adults can learn about, working people can learn about them. If they go to these websites, they're pretty well put together. The AICPA has made a significant investment in trying to increase financial literacy and have built some of these websites here to allow you to go to. I think this is sort of the link is embedded, I know, here in the presentation, and hopefully we can share that with you. But you start here, Go Places website for the AICPA has a tremendous amount of tools that can be utilized to help kind of increase one's education, not just only about taxes, but just about financial literacy and overall investments, doing your taxes, buying a house, a lot of specific life events. There's good information here to help you understand that. The West Virginia Society of CPAs actually has an equivalent type scenario as well. And these sites, like I said, they do provide very good examples and or insight to help kind of increase one's awareness and understanding of particular financial related literacy issues that students may have questions about, you may have questions about, just normal individuals can go here. And like I said, the IRS has basically a designated site actually for teachers that they can go to actually learn how to put together some of their curriculum and try to focus on particular topics to help one increase the financial literacy of not only themselves, but the students that they are trying to teach. I'd encourage you to go to these particular areas to find out more information and to sort of broaden your understanding so you're able to kind of build more of a curriculum about some key points that can be provided to the students. I wouldn't be given justice to the accounting profession and being kind of a longtime member, if I would sort of put a plug in for why it's so important to actually have people, think about accounting as a career option, right? Because I think what happens as a career option, you do learn and become more financial literate about your own personal financial situations if you have the opportunity. As I mentioned, there's nothing more certain. Death and taxes. That is just a quote that's there that everybody's probably heard. We're always going to have to deal with some of those tax types that we talked about earlier, just in our everyday life. So having a good understanding of it, maybe becoming an accountant is one that you can encourage your students to do. Accounting is not just about math, it's about problem solving, right? Through my career, although I'm a tax person by trade, my career has been in a lot of different areas. I've been a consultant where I'm advising clients on very tax specific situations, but I've also, done some preparation. I've been mostly a corporate person, but I take with pride, I still can prepare my own individual tax return. So I have a very broad-based understanding of my particular facts and circumstances. But and I can solve problems for businesses, companies, et cetera. It's part of every business, whether you're a not-for-profit or you're a government organization. There are still these types of considerations as it relates to taxes that then give students an understanding that there's a broad career of things to do when you're an accountant that may create some future job security. I will say this, and I just know from the profession standpoint, unemployment, and we hear about unemployment throughout our society, but unemployment is very low for individual accountants. There are an extreme amount of avenues, and it's not always about being a CPA per se, but there's a lot of growth. You can be, an auditor, bookkeeper, just a tax accountant. You can be an analyst, controller, manager, public accounting. You can work for one of these large accounting firms, or you can do your own business. Most of my career, I've actually spent a fair amount of time in both. I was in public accounting and I was also in corporate accounting for a number of years. You can do forensic, accounting, which, for those individuals who are involved in that, look, they can go work for the CIA, FBI. There are just a wide range of opportunities just by pursuing this particular profession. As I mentioned, the unemployment rate is extremely low for those who have some interest in accounting and have some of that background. There are always jobs in this field. So, it's one of those things, and there's an expectation that this profession will grow by 10%. So, I try to encourage students, and how I got sort of in tune with wanting to be accounting. It actually started pretty early. It actually went back to middle school. But the one thing that we've known and we've found out as a profession, as we've researched, is the sooner we can get students into an accounting course, and I know that all schools may not offer this, but having an accounting curriculum at the high school level accomplishes a couple of things. One, just a student being able to take that course, one, they'll learn whether they like accounting or not. And generally it just starts with kind of, do you have a love for math? But one thing we'll find out for a high school student is, whether they have the aptitude to want to problem solve, increase their own financial literacy and understanding it, that will impact their own personal understanding about finances. That is something that's gained. And then secondarily, the sooner a student does take a course, the more likely, if they really like it, the more likely they will go all the way through their undergraduate and potentially postgraduate, as well as maybe establishing and gaining some financial credential like the CPA. So it's kind of critical to have this introduction of the subject of financial literacy and accounting as early as possible in the process, to see if you can attract and increase the awareness for some of the students that are out there. So that's really what I had as a presentation today. It seems like we have about 7 or so minutes left. Did not know if there were any questions or comments or anything that I needed to fill from the group here as it relates to the topic that was discussed.
Damon, first of all, I loved your presentation, Joe Mountaineer. I didn't realize that your son was recruited here, so you're technically an honorary Mountaineer then.
Yeah, that's right. Exactly.
Well, we will have you at a Mountaineer football game anytime.
Awesome.
One question I did have for you, I was one of the students who knew I wanted to be in business and I was really good at math and wanted to go down that field, but I ended up choosing finance as my major versus accounting because I was terrified of taxes and terrified of dealing with the IRS.
Right.
So how can you make accounting exciting to these students and let them know that it is a really great profession to be into? And just so you know, when you look at the College of Business and Economics here at WVU, accounting is actually one of the majors that is down in enrollment from prior years. Finance is increasing, accounting is down. Sorry about that. But the jobs are still there. So the students that we're graduating are not keeping up with the jobs that are available in the industry. So what are some tips that you would have to make students excited about going into accounting as a major?
You know, that's a good question. I actually just came from a meeting yesterday. I'm on DE&I task force. I think had been introduced, and that was a very specific topic that we did talk about in the meeting. One, yes, I can acknowledge, I do realize we have a tremendous pipeline issue for accounting that is not being filled. Students are going to some of these other areas, and there are some very specific reasons for why that's happening. But I do think this is the one thing that I think that's exciting. So for me, you know, once again, I think you got to start early. It's not when they get to college. It's when they are in middle school and high school. And so I know as a profession, one of the things that we're looking at and doing is more outreach to get these students excited about, because my simple attraction was it was just math, right? And the other thing too is I actually didn't really know whether I was going to go into taxes or I was going to be an auditor, et cetera. Here's sort of, we got to get rid of a little bit of the stigma, right? Most people think that accounting is ticking and tying, sitting at a desk, having a pocket protector, and really just not doing anything outside of just working, right? There's no energy behind it. That's what the perception has been about accounting. Fortunately, I didn't latch onto that, because most of accounting, when you think about these larger firms, like most of you might be familiar with like the big four, like Deloitte, PwC, KPMG, Ernst & Young, right? Most of those firms, auditing, the true traditional accounting piece is just only one segment of those businesses. Those businesses, and where some of these jobs are coming from and how you can utilize your accounting degree. Like me, my path in accounting, when I started with KPMG, I was on the consulting side. I actually never even filled out a tax return. And I think what we've got to do is give a better representation of really what the field of accounting is and what the different types of jobs that are out there. You know, people can use their accounting backgrounds in many cases. I know a lot of people who are also in real estate, and they're in you know, every single thing. The key here where I think the advantage comes in is if you have an accounting degree, you're already speaking the language of business. That is the language of business, right? No matter what level of the organization you talk to, accounting has a root in that. So what I like to do and encourage you know, students to do is just, you know, get on the forefront, be the person that actually knows more about the whole operations, and that will be your avenue to being able to go into many different facets of business, something that may be a little bit more tailored for you. But until you get that accounting background, you really don't know that you have that ability to really differentiate yourself. That's where the leverage comes in from getting a job. I mean, and the pipeline is there. We are still trying to think through and figure out why the accounting students are down. And I just think it's about our messaging as a profession that we haven't done a good job of getting away from the traditional boring stuff, because the reality of it is, no matter what profession you're in, no matter what industry you're in, there are accountants there, and there are a lot of different jobs that you can take advantage of.
Oh, absolutely. That was a great answer. Thank you so much. Does anybody else have any other questions? Yeah.
How do you get kids excited about learning to prepare
How do you get kids excited about learning to prepare a 1040?
Yeah, it's funny, right? Like, well, so one, we all have to write a passage, right? So at some point, we all have to pay taxes. And this is what I do. I think there's certain, I don't have a list of those things, but I think there are certain games, there are things that you can, equate. It's not so much the exercise of preparing it. I think you have to break the 1040 down into certain components. And I think you have to build on those components and build lessons and things around those pieces of the 1040 that then, don't make it so daunting of a task just filling it out. For example, I think there's a lot to be taught around, income. Income streams are all across different businesses. They all have different accounting. They have different interpretations. So I think there's a creativeness also to about being accounting. Why did I go into tax? Because of the creative side. I could not be an auditor. There's no way I could sit and tick and tie, have to learn all those symbols, just not for me. But there's a creative side of things. And what I've just done is, I like the math. I like the problem solving. I like the also taking sort of for taxes, like taking the tax code and being able to interpret that number before it actually gets on the form. Those are the things as you go through the profession. And when you go to graduate school, I have a master's in tax. So I actually was sort of trained to be a tax person. But one thing I've learned is there's so many different variety of tasks and different tools you can use. I would encourage you to go to those resources because I think they have some of those out there to help break the 1040 down into a more meaningful thing than just filling out a form.
Well, I was gonna ask about this. I do owe the IRS because every year they keep coming back. You pay the school as so I was gonna ask, is there a way to actually show them whether that's the case, how making too much can also come back and haunt you, paying less in taxes? So I'm not comfortable discussing this with my kids, you know what I'm saying?
He said that he always ends up owing the IRS, so it makes him not want to teach it because he always ends up owing.
Yeah, well, so here's the key, though. Yeah, because it's the flip side. I generally have to write a check out, right, every year. But look, taxes are a reality, right? We have, we do take advantage of certain services and things that are provided. It's all wasted. Now, there's debate about how much you pay and where it gets spent. Now, that's a whole different avenue. But the reality is, look, we have to owe taxes. The thing I like to do, though, is when you have that scenario, or if you're getting a refund, the more in tune you are with what's creating that situation, maybe there's income you just didn't pick up or didn't know was reportable to you, but you can maybe have more communication throughout the year to kind of establish that. And also making sure you're on top of your deductions, because a lot of times when you owe money, maybe your deductions aren't necessarily being fully vetted. So it's about organization. And I do think that, it's painful to write these checks. And trust me, I've had to write some big ones. But the reality of it is I wasn't surprised. And it was because throughout the year of how I managed my own financial economic situation to create that expectation. So I think it's being more in tune with your, like the simple thing about the W-4 and your taxes brings you more in tune with your tax liability on a more regular basis than just looking at it once a year. And I think that's a shift. And the more you're in line with that, for me, it's easy. I love taxes. I know it's harder for others, but the more you're in line with that, the easier it will become for you to manage that part of your life.
Any other questions? Well, this has been really helpful. I really appreciate it. And if you're in town coming to a Mountaineer football game, you let us know.
Yeah, no problem. I appreciate it. And thank you to everybody for your attention and participation.
Absolutely. Thanks again, Damon.
Thank you.